in the greater Auckland area. To give you an idea, when I searched it on Wikipedia, Kuala Lumpur is 243 square metres, so we're nearly 4 times the size, but only 1.5 million people. The areas of Auckland, really there's the North Shore, and these are probably the more affluent suburbs that run from the north at Long Bay, down here to Devonport down the bottom, and at Devonport it's literally a 5-minute ferry ride across to the Auckland CBD. The other areas really go from the CBD, from Parnell, up in this top corner here, right around the waterfront, and going right out through to Howard. And the other areas that are very, very popular is the area of Remuera and Aoraki, Kohimarama and St Heliers, which are all very, very close to the city. They're all within 10 to 15 minutes drive of the CBD. One of the most popular areas is the Auckland Grammar School zone. The Auckland Grammar School is a very high international reputation, and this is the zone that where if you purchase a property in this location, and this is the same for all school zones in New Zealand, the school has to accept your child as a student there. So this is very, very close to the city and runs really from Parnell through those Remuera suburbs. I think it's fair to say that there is also a number of equally highly rated primary and secondary schools in Auckland. I just thought I'd put a couple of pictures up. The middle one there, that's Auckland Grammar School with the playing fields, the theatres. It's a beautiful facility. Remuera Primary School, so that's from years 1 to 6, or from 5 to about 10 years old, and then Epsom Girls Grammar down the bottom. Thought also we should just, David's already mentioned the cost to attend university, but this is where the universities are in Auckland. The top one there is Massey University in Albany on the North Shore. Auckland University is right on the heart of the CBD, as is the Auckland Medical School. And then there are 3 other facilities, Unitec, AUT and the Manukau Institute of Technology in South Auckland. I should also point out, so with regard to the schools, David mentioned that public schools are free. They do ask for a donation, but that's normally less than $500 per annum. It would normally be $300 or $400. And there are a number of private schools, and the cost to attend their schools from primary through to secondary would probably be in the vicinity of $15,000 to $20,000. I wanted to put this slide up because of the domination of the Auckland market. If you took this triangle here from Auckland, Tauranga, well that's the Auckland region, the Waikato region and the Bay of Plenty region, this equates to about 50% of New Zealand's GDP. So that will ensure that Auckland will be the driving force and the fastest growing city in New Zealand. These are currently the 3 top or fastest growing regions in New Zealand at the moment. However, I'll talk about Christchurch in a minute, and Christchurch will come through as one of those regions. I just wanted to talk about buying property in New Zealand. I will just mention Bailey's first. Bailey's has offices right throughout New Zealand. We have 63 offices, and we employ over 1,000 people. So we are transactional real estate agents, but we also do property management, valuation and project management as well. Buying property in New Zealand. Anybody can buy. You can come in, you don't even have to be a resident of New Zealand. You can buy a property today in New Zealand. There is no restrictions on what you can buy, what type of property you can buy. There is no capital gains tax and there is no stamp duty. The other beauty about it is you can sell to whoever you want. And I think that's a very valuable thought now we'd just look at a couple of the different markets, and we'll look at residential first. We went through the GFC, and prices did drop a little bit, but those prices have recovered and probably increased. What did happen is the volume of sales changed. So in Auckland, the volume of sales actually dropped over that 3-year period during the GFC by 60%, and outside Auckland, it dropped by 56%. Those numbers have since recovered last year and beginning of this year by 72%. And ex-Auckland or outside Auckland, they've recovered about 30%. So the market is certainly strengthening again, and especially in the Auckland area. For example, on the North Shore of Auckland, I think that figure is about 92%. So there's some strong recovery. How do we gauge the market? Well, we talk about the listings, the number of listings we have. At the moment, they're very, very low. They're at a historically low level. But that 31 relates to the number of days a property is on the market and how long it takes to sell. So it's actually, residential real estate is still a very liquid asset, if you can sell it within a month. Outside Auckland, that figure is 38 days. So there is a slight variance there. We just wanted to talk about what we think is going to happen in the year ahead. The transactions are certainly going to increase. We're seeing that now. The listings will certainly increase while interest rates remain low, and there's a lot of interest in the residential market. And we are seeing prices lift quite significantly at the moment. I do want to point out that I'm going to show you some examples, but the average house price in Auckland is $550,000. Outside Auckland, the average house price is $450,000. So I'm just going to show you a couple of examples of each segment as we go through. I thought I'd put this one up. This is on the North Shore of Auckland. This has a current valuation of about 1.7 million. It's 327 square metres. It has 4 bedrooms, 2.5 bathrooms. It's lovely ocean views, and all the properties I will show you are freehold. And a modern, very, very nice home. Here's another one in the east of Auckland, right above a marina. This is, again, about 400 square metre home. It's got 5 bedrooms, 2 bathrooms. You can walk down the hill in about 2 minutes and be at the ferry and catch a ferry into the city. But a very, very nice home.
What's the valuation?
That's about, sorry, that one there is about 1.7 million as well. This one is right in the heart of that grammar zone in Parnell. You literally, if you get in your car here and drive to work in the CBD, you're 10 minutes. But this home was probably $2.5 to $3 million. It's 5 bedrooms, 5 bathrooms. It's got a wine cellar, marble kitchen, pool, outside fireplace. Very, very nice home right in the heart of the grammar zone. I know a lot of people are interested in apartments, and I thought I should just give you a very quick overview. In Auckland, over the last couple of years, the majority of sales have been under $360,000. And these have been sales to investors who are just looking at a cash return. And the number of apartment sales is increasing quite significantly at the moment, and there will also, we're finding a lot of owner-occupiers looking for quality stock in Auckland. Just a couple of examples. This one's right in the CBD, right in the heart. It's a small unit by New Zealand standards. It's only 51 square metres, but as you can see, it's got lovely polished floors and high ceilings, very modern decor, and that's probably going to be around $250,000 to $270,000. Here's another one just out of the city, 10 to 15 minutes out of the city. It's one of the top floor apartments here. It's 2 bedrooms, got 2 car parks, it's got a swimming pool in the complex and a gymnasium and an on-site manager, and that's going to be around $350,000. I thought I would put this up. This is the Sanford residence. This is probably the highest quality building, or one of them, in Auckland. This is right in the heart of the CBD, but a 1-bedroom apartment there will cost you probably around $560,000. Some of these do have a guaranteed return, and that's probably somewhere around that 6% per annum. Just move on to commercial and industrial. What we've found is this market is very strong at the moment, and that's been driven by the lack of new developments. Since the global financial crisis, the banks have been reticent to lend on new developments unless there's significant pre-commitments. So most of the developments that are happening have been to owner-occupiers or people who have pre-committed their tenancies. Again, we look at the strength of this market by the vacancy rates. Industrial, I think that was up during the middle of the GFC at about 8%. That's tracking down to 5.5% and tracking down even faster because there is just no development. So a lot of the secondary stock is being taken up. The office number looks high at 12%. It was up at about 13.5%. But what happened in 2006, a lot of tenants committed to new buildings, new A-grade space. And so the buildings were built over 2007 to 2010. The tenants moved into their new space, but the B-grade space that they moved out of is still available. So if somebody came in and wanted to lease some A-grade office space in Auckland, if they wanted 3,000 or 5,000 or 10,000 square feet, I probably haven't got it. It's just not available at the moment. Retail, all the malls, and we're very similar to you in KL, is the malls are all full. There's very, very few vacancies. What this 3.1% relates to is strip retail and suburban retail. So what we see happening, certainly vacancy rates are tracking down, and they will continue to do so. Rents, because there's no developments, will remain reasonably stable, but a lot of our leases now have CPI increases, and they could be between 1 and 3%. Certainly, as interest rates remain low, the prime yields are still tracking down a little bit. Land sales are certainly on the increase, and that is across the board. It's even residential, a lot of new developments happening now. Construction certainly is very, very flat at the moment, and we have a lot of interest from offshore. That's not only Singapore, Malaysia, China, Hong Kong, and certainly Europe at the moment. Just a couple of examples. Here's just a little industrial lunch, we call it a lunch bar, where the workers go and buy their food. But this has been in the same building for over 20 years. It's got a rental of $18,000 per annum, and that's going to sell at somewhere between probably around an 8% yield. So that would be about $250,000. The next one, this is more of a development opportunity. So this is actually zoned residential. It has a veterinary clinic in the bottom and residential flat upstairs. It has a 5-year lease. But when the tenant relocates, you would either sell that to a developer, or you would develop between 4 and 6 townhouses on that property. So this is going to sell at somewhere 7.5% yield, around $1.2 million. And that's currently returning $81,000, nearly $82,000. The land area there is 1,320 square metres, so it's actually zoned for that redevelopment. And here's just a couple of very high quality retail shops in one of our busiest retail zones, Newmarket. So the total rental there is, well, there's two tenancies, one's returning nearly 80 and the other one 51. So and that'll sell somewhere around that 8%, just over 1.5 million. I thought I'd just businesses are very difficult to show because they move quite a lot, and also a lot of our business owners in New Zealand don't want their properties exposed too much because they've got staff issues or supplier issues. So, but we do have a business division and we have a lot of businesses for sale. I just thought I'd put this one up because this one is actually a restaurant, but it's managed completely. So the owner doesn't go there except on Monday morning to count the money that he made over the weekend. But this is about $850,000. It's on Waiheke Island, which is an island in the Gulf, about 35 minutes ferry ride. Very, very popular tourist and location, and a lot of people live there. It turns over $1.2 million per annum, but it is a 7-day-a-week business. But as I said, it's run completely under management. We do have a number of other businesses that might be import, export, distribution, manufacturing businesses as well. I did want to touch on the rural market because we have strong interest from offshore in our agriculture and the rural market. And I'm sorry, on the next slide there's a slight typographical area, because Jason's already covered it, but the share of GDP is actually should be 17.6%. The share of export earnings is 50%, and dairying as a percentage of our agricultural output is currently 39%. Why is this so important? And it really comes down to these three things. There's huge population growth, and a lot of the people who are interested in agriculture in New Zealand are trying to secure protein and produce to send back to the country that they've come from. We've had strong interest from China, who have just bought dairy farms, who are setting up new dairy factories, and that's solely to gain protein for their market. There's a huge expanding middle class in the world, and again, that's where our produce is going. And as Jason has already mentioned, we have free trade agreements with a lot of countries. So we can only see the rural market increasing. I just put up a couple of little examples. This property is less than an hour from Auckland City. It's 243 hectares, currently in 4 titles, but you could create 9 titles and sell some down. But that's around $10 million, and you do have access to the coast. This is a dairy farm in the Waikato. It's 182 hectares. It's currently producing 80,000 kilograms of milk solids from 280 cows. And that's about $3.5 million, and that is in Hamilton, just outside Hamilton. I would just like to talk about Christchurch very quickly because there's a lot of development and a lot of things happening in Christchurch. Just to give you an idea, at the moment there will be about $1 billion New Zealand dollars per quarter spent on the Christchurch rebuild, and they see this happening for the next 7 to 10 years. So there's 190,000 homes in the Greater Christchurch area, and approximately 100,000 of them were damaged in the earthquake, and about 10,000 were actually demolished. So the people no longer have a home. So what does that mean? It means that between now and 2025, about 36,000 new homes need to be built, and that will equate to about 42,000 new greenfield sections being developed in the northern and western parts of Christchurch. A lot of people are worried about Christchurch, but it was 2 years ago that the major earthquake happened, and they had a lot of small aftershocks, but they're just reducing now, and the government is absolutely committed to rebuilding the city So that's a very brief overview of the market. I would like, if you do go to the Bailey's website and you want some information on the market, we have a research division in there, and you can actually have a look at the research division, and it will break down into individual markets. But thank you very much, and if you have any questions, we're happy to answer them. I would suggest that in Auckland, the property values have increased somewhere between 10 and 15% in the last 12 months.
Other questions from the board?
Yeah, use the TLA just now, GFC. What does that mean?
Global financial crisis?
Oh,
Yep.
Thank you for inviting my message down and members of the panel. Looking at the chart, you mentioned that there are 4.5 million population, of which 50%, if you look at that, in the employment category, when you say working class, and of these 6.5% are unemployed. Now, basically, are they all over the country, or the bulk of it is in Auckland?
No, the full unemployment figure is across New Zealand, but there's some regional differences. So I don't know the exact breakdown, but the unemployment in Christchurch is certainly going to reduce once that Christchurch rebuild takes off, because there's a lot of people from other regions, the likes of Hamilton, Wellington, Oxley, Auckland and Christchurch, that are moving down there to rebuild the city, so there's a lot of demand on construction there. There's a lot of demand for employment in the major centre being Auckland, in the financial services and professionals area. But then you've got the area like Wellington, which is pretty government run. There's the obviously Parliament wise, most of the government agencies. They've been going through a restructure at the moment, so they might be slightly higher than the national average, or sorry, I should say slightly higher than what you would see in Christchurch and Auckland. So it is very regionally based, but the two big cities that have the highest demand for employment at the moment would be Christchurch, and then that's for more the trade services, construction, and then Auckland for the professional services.
My next question is, if somebody wants to start a company or a business in New Zealand, what are the conditions of employment and minimum wage applicable? How do you want to classify as an SME or not an SME? And if you were forming a company, would you fall under the SMEs? Are you given any grants and incentives to start a business there?
Setting up a company in New Zealand is very easy. It's something you can just do on the internet. So that's very simple to do. In terms of employment, well, New Zealand does have employment laws. You're required to have an employment contract with your staff. There's health and ACC legislation that you need to meet. The minimum wage is $13.75 an hour, and that usually changes on an annual basis, upwards, not down.
Yeah, so I don't know any specific SME incentive schemes that are on through the government, etc. And then how do you be classified as a SME? That's very around Statistics New Zealand rather than a specific number, etc. So it's very much about setting up the company and employing staff through the regulation that's been set through the New Zealand government. New Zealand, I wouldn't say it's a heavily regulated environment, but it's an environment that is very dedicated towards the rights of employees and staff and things like that.
Thank you.
Alliance also offers some support for cities in terms of training and in terms of guidelines for setting up business. And that's, you can find this on their website.
With the Christchurch church issue several years back, how big concern is an earthquake danger in New Zealand?
Differing opinions, I suppose. New Zealand's on their major fault line, which goes all the way from Auckland down to Christchurch. So we've always had that issue of earthquakes in New Zealand being relevant and known. And we do get, like we were talking earlier, that Auckland's we had an earthquake that was literally just a shake, and it would have been maybe 3 or something, it's hardly anything. But that's the first one that we would have had in, 10 years, or I do remember one quite a while ago that was again nothing major. Wellington is not unlike Japan in regards to excluding the larger ones that they've had. They have quite regular shakes down there, but again, 2 or 3 on the Richter scale, half the time you don't even feel them. So it happens all the time. In regards to the ones that you're asking is the big ones. There's no data or no forecast. It was, the professionals will tell you that there will be a big one in the future, but whether that's 100 years, 500 years, 1,000 years, we don't know. And Christchurch just has had their one. They don't expect it to happen again for a long time, but who knows?
So the Christchurch quake was actually made worse because of its location. It actually rolled across Christchurch and then hit a series of hills and actually bounced back. So if it hadn't actually bounced back, it was actually twice as bad as it should have been. They don't expect another one. They wouldn't be building in Christchurch if they expected another one. And I think throughout New Zealand we have very strong building regulations to make certain that buildings are protected from any earthquake.
But related to that, is the insurance you can take against earthquakes?
Sorry?
Is there insurance you can take to cover against earthquakes?
Yes, all properties in New Zealand are insured against earthquake, yes.
And what about titles? When we buy property, how soon is the title issued? Can you check online? In Malaysia, it's very opaque, so in the US, it's very simple.
Our titles are done on the same as the Torrens system in Britain. So it's a certificate of title is issued for every property. When you purchase it, it is transferred at the time of purchase and it is available for you to inspect.
And can you check online?
I can, but I don't know whether you can.
Well,
So solicitors and real estate agents, etc.,
Okay.
can log in.
In the US, you can go to the city hall, you can check any title as long as you have the parcel number right up to 1975, yeah.
Yeah, correct. And we can do that.
But not, anybody on the internet. It has to be a user.
Auckland Council's website.
Now, Auckland Council website, you may be able to, but to actually get a copy of the certificate of title, you would need to get through your real estate agent, your solicitor, some accountants and property professionals would have that. It's actually a service that you log into and you pay to.
Okay. In the US, it's free. Anybody who has access to internet can check transactions right up to 75. Whoever owned it, transaction cost, how it was transferred, things
Yes,
like that.
yes.
Yes, sir, yeah, follow up.
Earlier you were sharing a little bit about Christchurch and development opportunities. I mean, in terms of real estate, any other opportunities that you view as,
There's certainly development opportunities where people are buying parcels of land and building houses or building terraced houses or in some cases apartments. So there's definitely that opportunity. There's certainly opportunities for reconstruction of some houses well, refurbishment of some homes. And as I said, there's certainly greenfield sites that people are buying and subdividing into residential sections. Commercially, definitely opportunities. There's a lot of tenants who, when the earthquake happened, had to relocate from the city to, I would call, some people even leased solicitors' offices, leased shops, retail shops instead of commercial space. And some people went to industrial buildings. So they're looking to move back into the CBD and looking for people to build them buildings and tenant them on a long-term basis.
So because there are a lot of damaged houses and there's no capital gains tax, is there an opportunity to flip, buy, partially damaged houses and do them up and sell?
Yeah, it could be. Yes, it could be.
But capital gains tax would apply?
No, there's
Well,
no capital gains.
sorry. Let's just understand. There's no capital gains tax if you buy a property without the intention of selling it for a profit. If you buy a property and with the sole intention of selling it for a profit, you become a developer and then you are taxed on that. But on your own property, there is no capital gains tax. Or if you buy, you could buy a number of properties as long as the intention was not to make a profit out of it very quickly.
If you were, so if you bought a property, say they use the word investment. So for investment, you need to have a return. So if you bought a property, developed it, tenanted it, received income on it, and then sold it, you could argue, I'm not giving tax advice here, I'm just giving an example, you could argue that you bought those for an income and then at a later stage decided to sell them. Now I'm not saying you would be subject to capital gains, but you would have a strong case that you bought it for investment purposes rather than to sell for profit.
Is there a time limit for capital gains, like 5 years in Malaysia?
No time limit.
Oh.
It's a very grey area. It's really the intention that you go into the transaction on more than anything.
Okay, so there are no further questions. I'd like to thank you for joining us today. And would like to invite you to stay on for morning tea, when you'll have an opportunity to talk to the speakers on a more informal basis. Now, you can also make private appointments with any of the speakers, and we're around here today. And my colleague right at the back has a sheet of paper.